क्या करना है क्या नहीं करना है। गुड लक।
Thanks a lot. Thank you guys.
2 लाख कंपनीज ने अप्लाई किया है, जिसमें से सिर्फ 400 कंपनीज को पिच करने का मौका मिला है और 200 कंपनीज को एक्चुअल ऑफर्स मिले हैं शार्क टैंक में। यानी कि सिर्फ 0.1% सक्सेस रेट ऑफ ऑल द कंपनीज हु अप्लाइड फॉर फंडिंग हु एक्चुअली गॉट इन शार्क टैंक। इसको अगर कंपेयर करें तो आईआईटी, आईआईएम्स और गवर्नमेंट एग्जाम्स में भी 1 से 2% का सक्सेस रेट रहता है और उसमें कोचिंग भी रहती है जिसके थ्रू स्टूडेंट्स अपने आप को ट्रेन कर सकते हैं ऑन हाउ टू क्लियर दिस एग्जाम। लेकिन एज एन एंटरप्रेन्योर आपको कोई नहीं सिखाता कि ये फंडिंग वाला एग्जाम क्लियर कैसे करे। एंड लाइक मेनी फाउंडर्स हु कुड नॉट क्लियर द इंटरव्यू इन शार्क टैंक is a founder of Theka Coffee, who recently said in an interview that his business has actually grown from 30 lakhs in annual revenue when he came on the show to more than 60 crores in annualized run rate today. Well, he was one of those who was not able to raise funding on the show, even though the business has continued to do well ever since. लेकिन अगर आपका गोल ये है कि बिजनेस में किसी शार्क को कैसे लेके आए या इन जनरल को इन्वेस्टर को कैसे लेके आए, तो उसके लिए क्या करना होगा? Well, 2 things are required. One, the quality of your business is the most important factor when any investor is evaluating your business. It is the bedrock upon which their analysis is based on. And second is the quality of your pitch. आप कितने बढ़िया से अपने इन्वेस्टर्स को कन्विंस कर पाते हैं कि वो आपको ट्रस्ट करे अपने मनी देने के लिए, ताकि आप उसको अपने बिजनेस में इन्वेस्ट कर सके, उसको ग्रो कर सके और उस बिजनेस का वैल्यू इंक्रीज कर सके, जिससे बोथ आपको और आपके इन्वेस्टर्स को फायदा होगा। वेल, यू विल नीड टू फिट बोथ द क्राइटेरिया to get investment from a prospective investor. In my videos, I usually talk about the first part of the story, which is how do you build a good business. In this video, let's talk about the second part of this topic, which is how do you pitch to get interest from your prospective investors. Friends, I have been an investor for over 12 years now and have invested in multiple companies and evaluated several hundreds of these companies. And as a result, there are certain common traits that I have learned across these companies which have been successful in fundraising. Several of these companies that I have been involved with have not only raised money from financial investors, but have also done M&A or an IPO. And as a result, I have learned several tips, tricks and methods that they have used that have worked very well for them, which I will share with you in this video today. What we will do in this video series is that we will talk about 5 things that you should do while you're fundraising and 5 mistakes that you should avoid as well. We will begin with the 5 golden things that you should do. Number 1 is understanding the investor's mind. Number 2 is building a target investor pool to approach for your business. Number 3 is budget for expected timelines for a successful fundraise. Number 4 is choose the right investor. And number 5 is prepare for the fundraising process. I will end this video series with 5 mistakes that you should avoid while fundraising. The cost, time and effort that you will save on account of these is underestimated, so I will tell you to stay till the end and watch the entire video series. Also, it's very important that you share your learnings in the comment section so that the community of learners in this channel can learn from each other. Also, as they say, writing helps you learn better. So let's get into it and raise some funding. Understand the investor's mindset. Well, there are 5 key points that every investor uses to evaluate an investment. Strong team, the market dynamics, the product service offering and the business model related to that, the financial performance of the company, and what is the potential returns from the investment. So let's deep dive into each of them and start with strong team. Well, this is the most important factor that goes behind the evaluation of an investment by any investor. Depending upon the stage of the company, they will evaluate this from the perspective of both the founders as well as the broader management team. Well, in the initial stages when the company might not have enough traction, then what the investors look for is 1, do you have prior experience in the sector? बट अगर आप उस सेक्टर से नहीं हो, देन आप उस सेक्टर को कितने डेप्थ में समझते हो, आपने उसमें कितना रिसर्च किया है और आपका क्या विजन है उस सेक्टर को लेके. नंबर 2, व्हाट आर द यूनिक स्ट्रेंथ्स दैट यू आर ब्रिंगिंग टू द टेबल? Are there industry relevant skill sets do you have? Number 3 is, do you have a vision of where the company could be in the long run? Do you have a clear hypothesis of that and what the medium and short term could look like for you to get to the long term outcome? And number 4, can you attract quality team that will ultimately be required if the company has to grow and scale up, as it will require good quality talent beyond the founders to be able to do that? Well, if your company has scaled up, then the investor will evaluate not only the founders but also the senior management team on all the parameters that I just described. I have spoken about founder market fit in one of my previous videos, which you can see here. The second critical point that investor looks at is the market dynamics. Well, entrepreneurship is a lot like surfing. It is important that you catch the tide that gives you the momentum. Hence, your success is not only dependent upon the idea, but also on the market conditions in which you're operating. There are some key questions that investors look at when they are evaluating from a market dynamic perspective. Number one is the size of the market. Are you operating in a large market so that even if you capture a small share of the market, you could still be large enough as a company and produce handsome returns for the investor? Or let's say point number two, which is you're operating in a niche market, but there is potential for you to gain a large share of that particular market. Well, you have to be either one or two, which is either you in a large pond, you are a small fish, or in a small pond, you're a big fish. If you're a small fish in a small pond, then your investor will not be interested in evaluating an investment in your company. You will always start small. But the point is, can you scale or not? Now let's talk about the third point within the market dynamics framework, which is how much is the market growing and are the regulations supporting growth? I'll give you an example here of the manufacturing sector, which is witnessing significant growth in the country, given the tailwinds being provided by the government in the form of policy and financial incentives. So if you are a player in the manufacturing sector and looking for funding, please do reach out to me and I'll be happy to evaluate you. The fourth point within the market dynamic framework is how strong is the competitive intensity in that market and what is the barrier to entry. Again, I'll give you an example here of one of my previous investments, GPT Healthcare, which recently did an IPO. They had an interesting strategy of focusing on the Eastern India healthcare market, which is still underpenetrated when it comes to quality healthcare at affordable prices. Now let's talk about the fifth and the last point within the market dynamics framework, which is what is the size and the financial profile of companies that are operating in the sector both in India and internationally. Well, I have talked about competitive intensity. How do you think about that? And looking at the financial profiles of the competition and benchmarking them in one of my earlier videos relating to the food industry. So if you are keen to watch that video, the link is here, which you can watch after this video. Now let's talk about the third point within the broader framework, which is the product service offering and the business model. And the key question that an investor thinks about within this is one, what is the impact on the customer because of your solution? For example, when an ad targets you, it speaks your language. Meaning, अगर आपको कोई skin care product की ad आती है, तो it will call out that this reduces acne by 98% or this hydrates your skin by 3x more than this other product and so on. Well, they focus on the effect and the value to consumers, exactly what investors will evaluate you for. Number two is how differentiated is your product service from your competitors. And now again coming back to GPT Healthcare, उन्होंने अपना differentiator रखा high quality service at reasonable prices. So in the neighborhood that they operate in, they want to be the preferred choice of their customers or the patients. Number three is the pricing dynamics. They value that you give to your customers and how unique it is directly impacts the pricing that you can charge them. Are you able to command a premium compared to your competitors? For example, let's look at the Asian Paints example in the paint sector, where this company generates anywhere between 20 to 22% EBITDA margin, whereas all its other competitors are between 13 to 17% EBITDA margin. There are several factors that contribute to it, but the primary factor is the fact that they charge a premium to their customers over and above what the other players are charging. And that reflects in the margin structure and the valuation multiple that they get in the market. The fourth point that they look at within this framework is आपका product or service offering future में कैसे evolve होगा. How well do you understand your customer's mindset and the market typically guides what your future product and service pipeline would look like. And this is very important for an investor because that will basically dictate what your future growth trajectory will look like. Let me give you an example here of one of my portfolio companies called Entry, which operates in the edtech space. So when they initially started, they were offering recorded courses. Eventually, they realized that the students needed more interaction, and as a result, they started live courses where students and teachers could interact with each other live in a particular class. Eventually, they are now leveraging AI so that they can even further augment the experience beyond the recorded classes and the live classes. Fifth point within the framework of business model and the product service offering is the moat or the differentiation that you have vis-a-vis competition. So is IP key for you to staying ahead of your competition? Think about Apple or a Tesla here. Or is it sheer execution capability? Think of Zomato here, where Swiggy at some stage was way ahead of them. Or is it the sheer scale? Think about Reliance or DMart here. Well, the last but not the least important point within the business model framework is the scalability of your venture. No offline business can scale unless they are implementing technology to manage operations better. So if you are a manufacturing setup, are you introducing automation in your factory or warehouse to improve efficiency? Or are you leveraging SAP or other ERP tools to manage your day-to-day operations better? An investor is interested in your business only if they think that the business can scale, grow large enough for them to make handsome returns on the investments. So they will evaluate on your capability to grow and scale the business. The fourth point within the broader framework is the financial performance of the company. Any investor will do a detailed analysis on the financial profile of your company. On the screen, I'm sharing some key metrics that they will look at while evaluating your financial profile. You can capture the screen on your phone. Number one is the key financial metrics, which includes your profit and loss statement, your balance sheet, and the cash flow statement. Number two is the key operating metrics that are driving the overall financial profile. Number three is the growth profile and margin trajectory, both the past trend as well as the future forecast. And number four is the financial and operating metrics comparison against other players in the space. All these factors will determine whether one, the investor finds your company credible, and number two, what do they want to value the company at. Apart from all these factors, well, what they also look at is the time and capital which will be required for the company to become profitable or self-sustainable in case you're not generating profits today. And this allows your investor to evaluate the capital requirements in the future and your ability to raise them. They also look at what is the unit economics of the business, which is the margin that you are able to generate against the cost that you incur to get a customer. The margin is what is called as the long-term value or the LTV, and the cost to acquire a customer is what is called as CAC, which is a customer acquisition cost. So what they will look at is what is the LTV to CAC ratio. Ideally, a healthy LTV to CAC ratio is at least 3x or close to that. Finally, the investor will conclude their analysis by calculating what is the potential returns from the investment. They will try to understand basis all the factors that we've just discussed on what are the returns that they can expect from the investment. And they will conclude the analysis with three key points, which is one, what is the potential size of the company in the investment horizon in terms of revenue and the key margins. Number two, what is the revenue, EBITDA or PAT multiple that they can expect from the investment? And number three, what would be the exit route from the investment? Is it an IPO, strategic sale, or sale to a larger investor? Or it could even be a company buyback. And as a result of all of the above, they will arrive at what is the return that they can expect from the investment that they are looking at. I hope through this video you've been able to decode what an investor's evaluation framework looks like when they are evaluating a company. We will cover other aspects of fundraising in subsequent videos of this series. But before we end, tell me in the comment section any questions that you might have relating to the fundraising process, and I will share with you tips on that. I will see you soon in my next video. Till then, stay happy and stay healthy.